Hi, everybody. This is Robin and Christy from the Robin and Christy Real Estate Team. How are you guys? We have our team with us, as you'll see here, and Crystal, Raquel, and Tara. And then we also have our special guest, Vanessa Henderson from Academy Mortgage. And we welcome you and are happy that you are going to help us through this topic of forbearance versus deferment. So would you want to take a few minutes there, Vanessa, and introduce yourself again and kind of a little bit about you?
Absolutely. So Vanessa Henderson, Academy Mortgage, based out of here, Corona, California. 22 years in the industry. Got in the industry subprime. I'm sure everybody heard of subprime. That's when I started, and I have managed to navigate and stay very busy, very successful through all the ups and the downs. COVID was quite the newer experience, and still managing to navigate through a world in which we have not had to live through, lending wise, real estate wise. You know, everybody's experiencing different forms of job loss. So that's my experience and what I kind of bring to the knowledge that I bring to you guys.
Awesome. Well, thank you. So right now with the market or COVID as it is, and some people coming across financial difficulties and maybe took advantage of not making payments once COVID started. I think we kind of jumped into that in that fear factor mode, and we don't know now what that really means. So we're excited to hear what you might have to say and share and help our viewers understand what their options are, right?
Yeah, I think the basic questions right to start with is, what's the difference between a forbearance and a deferment?
Right, that's it, exactly. So, you know, when all of this did start, you know, everybody did panic. I have friends, coworkers that weren't sure if we were going to have a job in 1 month, 2 months. We didn't know what the market was going to do. So the first thing you're going to do is when you hear that you can get a reprieve from your mortgage and you don't know what's going to happen, you call your bank and say, whatever it is that you have, because it was really vague in the beginning. There were so many emails and messages and everything coming out that people were saying, hey, I'm afraid that I'm going to have a loss of income. People that didn't ultimately take advantage of it. But really, there is no difference between a forbearance and a deferment in terms of language. It's a forbearance, you're asking your mortgage company, I need to not make my mortgage payment for the next 1 to possibly 3 months without penalty. Same with deferment, you're deferring your mortgage payment. In essence, it is the same. Now, what your individual bank, what your individual mortgagor chose to do with that was kind of up to them. A lot of companies came in and said, whether you're on a forbearance or deferment, we're going to give you 90 days with no mortgage payment, but at day 91, you're going to have to pay that money back. Some mortgage companies came in and said, hey, we're going to take those 90 days of mortgage payments and we're immediately going to, if your loan was going to end January of 2040, they're going to say your loan is now going to end April of 2040. So they tacked those 3 months of payments onto the back of the loan.
Right.
So, along with the interest as well?
Yes, because you're not paying the principal or interest. So basically, it's as if they've extended the life of your loan for 3 months.
Okay.
I have not personally heard of anybody yet, and maybe you guys can tell me otherwise, that have had to go back and make up all those missed payments. Many of the servicers have chosen to tack it on to the back of the loan. And you should have received some kind of guidance via email, via letter from your mortgage company stating that you have a new term of your loan, that like a modification to your note.
So if our viewers or anybody who's in this situation and they have not received that letter, and they have not made their payments since March possibly, what do you suggest that they do now?
In that case, you need to contact your servicer, and most importantly, you need to ask, when is my money due? Do I have a lump sum payment that I have due Most of them came due September 1st. So we're in a position where we're now September 18th. So anybody that took advantage of that early on really should have by now already been out. But if you've never received a letter, a note, an email stating what happened to that 3 to 6 months of payments you didn't have to make, you need that for your file. You really do. Imagine 2 years from now, you sell your house and all of a sudden you've got penalties and interest that you didn't realize that your lender tacked on for not making those 6 months of payments. So it's very important, if you did take advantage, to have something in your file, something is stating exactly what happened and what they did with those 3 to 6 months worth of payments.
Okay. Yeah, I think I personally, and I don't think we know of anybody, to answer your question earlier, that we know of anybody that had to come clean with their 3 months right off the bat up front. A little bit different than the recession time frame. Remember when that was happening, they were like really strict, and they were back in 2010 and 9, 10, and 11. They were like calling due like right then and there.
Right.
We had not heard, and haven't heard of anybody, unless anybody else on the team has, of anybody having that note called up right away for those 3 months. Okay.
Yeah.
So with that said, if let's say I did that and they deferred it and they put it on the back end, and I want to do a refi, or somebody that person wants to do a refi, can they do a refi?
Right. So
still
now
with the deferment.
So we finally do have a lot of guidance that has come out from, we call them the agencies. So you've got your traditional conventional, which is your Fannie and Freddie. You've got FHA, and you've got VA, your VA home loans. So we have guidance now from all of them on what happens if you did take advantage of a forbearance, and if you want to do financing, refinancing. Let's set FHA aside because they have their own set of rules and guidelines. Conventional financing and VA follow all the same guidelines. So if you were somebody who took advantage of a forbearance and you chose not to make the 3 months of payments, and you are now out of forbearance, meaning that you are, September 1st, your mortgage was due and you've paid that. You can refinance, you can pull cash out, you can purchase. There's no rules. And I have to preface this by saying that this is an Academy mortgage. We follow the guidelines that all of the agencies have put out. There are other companies out there that are not following those guidelines, and they're adhering to their own, and that's fine. But we are sticking to the letter of the mortgage rule, and that is the rule. Now, let's say you are in the middle of a forbearance right now, and you have not made your July, August payment, and you're not supposed to make September, but rates are so good right now, you want to refinance. Well, the rule is you have to make up all the past payments. So you have to pay July, you have to pay August, you have to get caught current on September. You have to get a letter from the bank stating that you are now out of forbearance and you've made all of your payments. Wow. They can all be made in one lump sum. So we don't need, you paid July and July, you paid August and August. We just need all payments made, caught up, and a letter from your mortgagee that you are out of forbearance, and we will do a refinance for you, a cash out refinance. We can close it now.
So with that scenario, so you're saying if I'm in the forbearance process, I can't refinance unless I make up everything that I have not paid. But if I waited till my forbearance period was over, then I could do the refi without having to pay all the back pay.
That is correct.
Oh man.
What if they put it at the back end though? What if they put it at the end of the loan?
We're paying off the loan. They're getting paid off. And so the payoff will reflect those 3 payments you didn't make.
Got it.
So we're good, just so I'm clear.
We're good. Yep.
Okay, got it.
Yeah, the payoff is going to indicate, way back when people did modifications and, all their late payments were tacked onto the back of the loan, $20,000, $30,000. Well, that never prevented them from refinancing, but that money has to be paid off. That bank wants to be made whole before they're going to allow you to obtain a new loan. It's very similar.
Okay.
They get paid their missed payments, and we write a new loan. And again, this is conventional. So Fannie, Freddie, VA. FHA, whole set of different rules for buyers wanting to use FHA financing, streamline their current FHA loan, much different rules.
We have a
Meaning
question.
possible or not possible? Sorry, Crystal. Possible or not possible, or just different possible?
Possible, but it could delay you an entire year from being able to refinance or purchase again.
Wow.
Wow. Okay.
Before we jump into that one, we have a quick question. Does going through a deferment or forbearance affect your credit score at all?
No, that was one of the big rules of, I think that they call it the CARES Act. One of the big rules is that you will not be impacted credit wise. Now, I will say you had some people thinking that if they just don't make their mortgage payment, they were going to be fine, that they didn't have to contact their bank, that everybody qualified. That was a big mistake some people made, and they were impacted. But as long as you contacted your bank, requested deferment, you got a letter or an email stating, yes, you are deferred, your next mortgage payment is due this date, then your credit is not affected. Your lender, Academy Mortgage, will not penalize you for that.
Okay.
All right.
Good to know. There's some other questions too. Let's see, we got some other questions that we have written down. I just want to make sure we don't have anything up there. What department would someone talk to get these answers to some of these questions from their bank? Is there a specific department, or they call customer service?
Customer service. Customer service. Yep. And I don't know if any of you attempted to contact your lender within 45 days of the stay-at-home orders, but I had customers on the phone literally the entire day trying to get a hold of somebody, being hung up on. I think the majority of that has now subsided, and you should be able to get in contact with your lender customer service, the number that shows up on the monthly bill.
Yeah, and just so that you guys know, and all transparency, when this did hit, we didn't know how our industry was going to go, our own industry, right? And so I was on the phone to our bank asking about this. And I put that call out and got that okay that yes, you could forbear. And we were blessed and lucky enough that in our industry, it stayed busy and we didn't have to do that. So
yeah, we were non-essential to begin with, when that's why you made the phone call, because we were considered non-essential, right, at least the first couple of weeks. And then after that,
then I went ahead and we did not do the forbearance. We made our house payment. That wasn't, the idea was not to not make it. It was just in case.
Right.
And then I did get a letter. We did get a letter that stated that you didn't take advantage of the program, so nothing needs to be done, basically, which was nice. Nice that they actually followed up with us on that. So another question is: does somebody have to prove that they have been affected by COVID in order to qualify for the forbearance or the deferment?
That's a good question. I'm not the loan servicer. How do you say you're not impacted by COVID? You could be a landlord and your tenant's not paying rent. You could be caring for somebody that is a contributor to the house that has been affected by COVID. I mean, truth be known, if you were deemed essential, that still didn't mean somebody in the household contributing to. The rule was, if somebody asked, they were going to be given forbearance.
Okay.
Period.
That's what happened with us. We weren't affected by COVID directly, but we did ask for it just to be on the safe side.
Yeah.
So they didn't actually, that question didn't come up, did it?
It came up. I answered it before they probably even asked it. I specifically said, we're considered non-essential, so what are you going to do to help me out?
At that time.
That time. So
yeah. If you asked, they were supposed to grant. Period.
Okay.
Okay.
Another question is 3 months the maximum amount that somebody can defer their payments? Was it a 3-month plan? Is it a 6-month plan, or whatever plan you needed, or how does that work?
Initially, I think it was 3. And then as we moved forward and realized that we could be in this until, so when did this start? March?
March.
A lot of people were given until September 1st. So I think 6 months. Some people were given 3 months, and then they had the ability to apply for another 3 months depending on their servicer. Because you've got banks, you've got loan servicers. There's a difference between the two. And so it could have been September 1st, or it could have been at 3 months, you could reapply for another forbearance. I specifically have a client that went 3 months and that forbearance ended. And then he requested another 3 months and decided this is a good time to refinance. Can I refinance? We're refinancing him right now. And he didn't have to pay back the initial deferment because that one ended. But he did have to get caught up with the last 2 months of payments on the second portion of the deferment he requested.
Okay. That's all great news. I mean, it sounds like the banks or the servicing companies are a lot more flexible than what they used to be.
There's a lot of us out there, Academy Mortgage, we are a retail lending institution. When you compare to the wholesale broker world, so if you've got somebody that's a broker and they're putting your loan out into that wholesale market can do what they want when they want. They have no rules with which they have to abide by. So you've got lenders out there that won't touch anybody who's self-employed, period. Still, doesn't matter if you're essential or non-essential. You have lenders out there that if you derive income from renters, they're not letting you use that income because of the new tenant act, tenant rules that there are. So that wholesale world is a very scary world. And if you are buying, if you're refinancing, you need to ask your lender those questions. Who are you sending my loan to? I'm self-employed. I've got 5 rental properties. Is this going to be, if you don't want to find out 3 weeks down the line when rates are this good, that wherever they placed your loan has crazy rules.
Okay.
Right. Another question we have is, if the bank doesn't offer an option that you like or that works for you, what can you do about that, if anything?
In terms of requesting forbearance deferment?
Or well, that question's unclear.
So if you're
not so much the request, I think it's more of if it's going to be a balloon payment at the end of a deferment or a forbearance, and just add it on, like you said, the 3 months
that's their. It's whatever customer service number they're calling, whatever type of loan that they had. Most of if you had your atypical agency loan, conventional loan, they're mostly following the same guidelines. But if you had done a bank statement home loan and your loan is being serviced by ABC company, that's your servicer. Those are your options. If you don't like those options, I honestly, I wouldn't even know how to answer that question.
I know, going back to when I had made the request for us, I had asked them what's going to be my options at the end, and they were very vague. They said that it could be one of 3 things, that you will have a balloon payment all done at the end of the 3rd month. I said, well, that doesn't make sense, because I would just continue to I would make my payment on time. How am I going to have $6,000 if I don't have $2,000 a month, right?
Yeah.
Or they said that they were going to, the possibility of a balloon payment at the end. So you had your 30-year loan, and then that instead of the 33 months or the extra 3 months, you owed another 6 at the end, or you go into, they could force me into a modification.
Correct.
So they did give me those ideas, but they couldn't tell me which one it would be.
Nobody could, not in the beginning. It was so new. It was so new that all these, you're getting customer service reps who are begging their companies for information. Like, what do we tell these people? What they're, it's, this could happen, because there was really no guidance that had come down. It was still very vague. Now, if you were to call and ask, there should be no vagueness about it at this point. It's all very cut and dry for each individual servicer and what the word I'm looking for, what I guess what category they fall under, what the category of the loan that they fall under. But by now, if you were to call and say, I'm now impacted, my company tried to keep payroll up, they finally run out of money and they're still not allowed to open, I want a forbearance. And they should now be able to say, okay, you know, Mr. Thompson, this is what we have for you. Which way would you like to go?
Got it. Okay, so that would be your advice to anybody who hasn't taken advantage of the forbearance yet, who may need to take advantage of it now.
Yeah.
Your advice to them would be to make that call to customer service and give them the situation that they're in, and then go from there.
A lot of companies got that PPE money to payroll up, but it was only for a specific amount of time. So once that PPE money runs out, if you're still deemed not essential and you still can't open, you're going to have to start laying off people that you hadn't had to before. So you could still see people, even though it feels like things are going to start opening up, there's still companies that can't open that have been stretched thin. So you will still start getting people again now that need to request forbearance because their company's payroll is no longer supported by those PPE loans.
Is this, you know, we've been mainly focusing on residential. Does this affect commercial as well? Do they do this with commercial at all, or?
Oh, that is something, I'm not a commercial lender. I wouldn't even want to touch that question.
Fair enough.
That is really good to know. I don't know how commercial business is, because when you think you've got commercial buildings in Corona up like crazy, if your businesses can't operate, you're not getting rent. I don't know the answer.
Okay. Good to know.
Go ahead.
No, I just gonna ask a couple more things.
Go ahead. And then I got a couple.
Is there any concern that any consumer homeowner would need to worry about any fraudulent scam things that the banks would be calling them to suggest this or offer this, or are they reaching out to the consumer or the owner of the home to say, hey, by the way, we can offer you this program? I mean, is there any of that going on? Do you know of?
No, the lenders are communicating with their clients via like email. They're online. You know, anytime a customer logs into, you know, if you're a Wells Fargo customer and you log into Wells Fargo, your mortgage account, you know, it's blasts. If you've been affected by COVID, nobody's proactively contacting clients and saying, are you affected? It's as you log in on your mortgage statement. My mortgage statements that come in the mail, big bold, have you been affected by COVID? Please contact us at this number. So there is no verbal solicitation going on.
Okay.
Scams, there's always somebody trying to take advantage of somebody.
Right.
You know, it'd be easy to just randomly pick somebody and call and say, hey, I know you took advantage of a modification. We're here to help. If you give us this amount of money, we'll pay your mortgage. I'm sure there's all sorts of scams, but what lenders are doing is just putting it on their websites, putting it on your monthly billing statements. It's very, very transparent.
So homeowners beware, right?
Always beware.
Always, yeah.
Yeah. Okay. Crystal has a question.
Yeah, another question that was brought to us, Raquel is bringing it up. Can we get multiple deferments or forbearances on multiple properties that we own? And what if those are investment properties? Does it apply to those as well?
It should be, yeah. Yep, you've got a tenant that can't pay their mortgage or can't pay their rent. So that means you can't pay your mortgage. And which leads me back to that rental, the commercial part of it. I own a rental property. I've been lucky enough, thank goodness, thank gosh, that all of our tenants have paid and continue to pay, but there is no, doesn't matter what type of property. It could be your vacation home, a rental property, it could be a duplex or a fourplex. If you are experiencing a hardship, if you say you have a hardship, they are supposed to be offering you assistance, period. They can't even ask for your income. They're not allowed to say, hey, Show us your last 4 paycheck stubs. Show us your last 4 months bank statements.
No. Is that where the
Another
CARES
question?
Act comes in? Is that where the CARES Act comes in, where they could actually go and see these guidelines? I know that there is the website for the consumer finance. Is that something that details that information for anybody?
There is under, I'd have to locate it for you, but there was something that came out that it was guidance stating that if you're a consumer and you're requesting a forbearance, you will be offered modification. You will be offered like you said, you got offered 3 things. Well, it could be this, could be that. Well, it's a little bit more set in stone. We can offer you a modification over 12 months. We can offer you a 3-month deferment that you'll have to pay back. We can offer you, but you should not be denied because of what type of property is it, if it's your investment or if it's your second home. If you're impacted, you're impacted.
What if somebody gets, let's say, laid off? They lose their job. You know, a lot of people have lost their jobs through this crisis. So what if somebody loses their job? Are they still able to get it? Would the bank still allow them to get a deferment or a forbearance?
Yes, but how long? I mean, it's only going to be
just those 3 months.
Yeah, 3 months, 6 months. We still have people that cannot go back to work.
Right.
Period. We have people that are still not back on the job even after 6 months. Most of everything was ending September 1st. So now that we are at September 1st and we still have industries that are not back to work, and I'm making an assumption because there's really no guidance out there as to if I were to call today and I've been out of work for 6 months and I still am, how long are they going to allow these people to forego mortgage payments? That's something that hasn't been addressed yet. On how long are banks going to be willing to let people go without making mortgages? Are they going to let them go 9 months, 12 months? Because that causes burden on the servicers at some point.
Which actually goes to Kinesa's question. So Crystal, do you want to ask that?
Oh, yes. Do you think that the deferment / forbearance will impact our market that could cause a crash?
This is personal opinion,
Okay.
total personal opinion. Going back to when I went through the mortgage, the mortgage meltdown in 2008. Those were bad loans. Those were loans that were interest only. Those were loans people weren't paying interest. Those were adjustable rate mortgages for 2 years that were going to adjust, and then all of a sudden the market just went like this, and then you had massive unemployment and you had property declines. So you had massive foreclosures. There was nothing you could do about that. The last 6-7 years, everybody has been, it's your ability to repay your mortgage. You have to qualify to pay your mortgage. And what's happened over the last 6 to 7 years? I mean, in 2012, those people have doubled their property values. Even people that bought 2 years ago, I'm refinancing them. They have 20% in their house where they only put 5% down. So my own personal opinion is that the difference between then and now is that, if you've got a homeowner going 6 months with no mortgage payments and they're sitting with $10,000, $15,000, $50,000 in equity, there's an opportunity for them to make a decision. Do I sell now?
Yeah.
Take the money that I have and go rent for a while and not, and have some money. So the difference for me is that a lot of people have equity. A lot of people do. And so when the banks come in and decide they're not going to allow you any more time to defer your mortgage, you have to make a decision on what you want to do.
Yeah, I remember a while ago we sat with the economist, and he said that he couldn't see foreclosures on the rise because everybody had so much equity in their homes that they had choices.
Yes.
So, there's no more questions that we have written down. If anybody on the panel or anybody else on our team has any questions, go ahead and unmute yourself and ask. But Crystal, can I ask you to, I know that, I don't know, Vanessa, if you gave these websites to Crystal or Crystal, located them, but we have 3 different websites that I think our people can go to get information, and that is the for the CARES Acts that we talked about, and Raquel just posted something on there as well. And then we have the Fannie Mae and the Freddie Mac specific websites to go to get information on. So if you don't mind, Crystal, posting those on there, that way that anybody on can get those websites. And she's so fast.
She's so
How
fast.
do you do it so fast?
I'm like looking at the computer over here going, did I give you those websites? I have no idea.
I know she did.
I did
Does
some
anybody
research.
else have any questions
Crystal.
for Vanessa? And unmute yourself. You don't have to type right now. If you guys have any questions, just raise your hand and we'll just call on the first one. So
I did have one because I think that what Vanessa just said regarding equity and needing to make that decision at some point, is it more beneficial to you to keep trying to defer it, and what does that look like for you in the future, or do you have to sell? I feel like that almost segues back to you, Robert and Christy. Like, how is there anything that a realtor or a lender can do to help somebody kind of, you know, put those options on the scale and determine which one might be in their best benefit? You know, we don't want somebody to have to give up their home, but if it's between that and going into foreclosure or having to do a short sale, you know, there might be some information that your realtor or your lender can provide to you to kind of help you balance the scales and figure out what the best option is for your family.
right.
So do you guys have any?
Yeah, I'd like to, you know, personally, I think that they should try to work things out, like Vanessa had mentioned, try to work things out with the existing servicer that they have. That's option one. That's probably the most and best option for anybody. And right now, as it stands today, we don't know what's going to happen next year, but as it stands today, it sounds like what we're hearing is that they will work with you. Again, like Vanessa had mentioned, maybe some of these off-brand mortgage broker type servicers may or may not be able to work with them. I spoke with somebody well known in the industry, and he's pretty adamant about stating that we hold on to the real estate. You hold on to the real estate as much as possible, because traditionally that is your best bet. I know there's some people out there like, well, should I, including myself, actually, to be honest with you, was, you know, should you sell now, you know, and then wait to see if the market's going to crash, or hold on to the real estate? And the answer by multiple good, reliable sources is said, hold on to the real estate. So as long as you possibly can. Obviously, if you're going to get threatened by your servicer that they're going to foreclose or do a short sale, you know, obviously a short sale would be your best option before foreclosure. I don't think anything's changed in that arena.
Hopefully there's not a lot of short sales based off of what Vanessa's saying with the equity balances people are holding.
Exactly.
But you know, I think it's going to be a personal preference. If you're going to move eventually and you're forbearing your payments right now, and you're going to see yourself moving in a year, this might be an opportunity for you to move, because you are going to get high dollar for your house and get a little bit extra cash. But if you're not, you know, that advice that Robert received has been multiple times. So yeah, I've obviously got to be case by case.
So let me break this down one more time on that, Vanessa. So if somebody's lost their job and they have equity, would a servicer be able to do you know, and so they're threatened, they don't want to lose their home, but they have equity. Would it be possible to do a refi, or would they require them to do a loan modification to take out some of that equity to get caught up on payments? Does that make sense?
Yeah. Well, if you've got somebody that's currently unemployed, how are they going to qualify for that?
Right.
How are they going to qualify for that refinance? So when it comes to job loss and you're working with your servicer, at some point, if you haven't gone back to work, it really does just go down to a financial decision for you and your family. You know, go back to 2008, property values declining. Some people had job loss. Some people didn't have job loss, that walked away from their houses thinking, if I walked into this house with $5,000,
yeah,
I'm out. You know, I've lost 50% of my equity. We're out. We don't care. We don't want to make the payment anymore. We'll go rent for whatever. I think it's It's going to be a personal decision for them. And, you know, they want to talk to their family members. They want to talk to their CPA and say, you know, what are my options here? Do I pull money out of my 401k for the next 6 months to make mortgage payments? The CARES Act put in, added a stipulation on pulling money out of your 401k with no penalty to help offset and alleviate your job loss.
Right.
I've had several clients come to me and say, hey, I took advantage of that and I have $20,000. I want to buy a house. So it's, once your mortgage servicer is not going to help you anymore, they're just not going to help you. There's nothing aside from, you know, like the good old days of hiring an attorney and trying to fight the foreclosure efforts of your lender.
Yeah, because I mean, to me, it's sad if you got somebody who's been, let's say they've been in their house, you know, 10, 15 years, and they got $100,000 in equity sitting in their house, right? And they lose their job. And it's kind of sad that here they got this lump sum of money that's sitting there, that's equity, and they can't use it just to be able to make up lost payments, you know, and here all of a sudden they would get booted on the street, right?
Well,
you know, I mean, I know that but I'm saying that they just want to stay in their house. You know, they don't want to move. They don't have to be forced to move. I know they could sell.
No, but why wouldn't they would just forbear it, right?
Well, yeah, well, up to a point, right? How many times will they allow them to forbear if you're unemployed, right?
Yeah. Right. That's the big question, is that how the initial was till September 1st. A lot of people, I have till September 1st, Vanessa, my forbearance is done September 1st. Great. If you want to refinance now, you got to catch those payments up. Or if you want to wait until you're out of forbearance, let's hope interest rates are still low, and now you can refinance. But if you're still suffering job loss and you haven't gone back to work yet, and your bank is going, no, we're under the CARES Act, we were supposed to go to this date, so now we're not going to do anything anymore. That's the part that's kind of the gray area for me, that I really haven't seen a whole lot come out after that initial CARES Act. And it is obviously something worth looking into.
Maybe this is too deep in the woods, but say they have job loss, they get deferment, they go and get another job in a totally different industry because, you know, got to put food on the table. Well, how much time needs to pass before they can qualify for that refinance so that they can stay in their home?
Good question.
So you can change jobs. We don't care. You can go from a salaried CEO to a full-time administrative assistant at Staples. It doesn't matter, as long as it's a stable 30 to 40 hour a week job. We will take that new income. Where lenders typically have the problem is that you've suffered a job loss and you've had 7 jobs in 6 months. You're going from staffing agency to staffing agency to staffing agency. That's not permanent work. You go part-time, you're only working 20 hours a week at Hallmark. That's a big change in income. We wouldn't be able to qualify, but if you were going from being an engineer to now you are an admin, it's fine. There's no, lenders won't balk at that.
How much time will they need to have been in that job, or does that vary?
Typically, if you're out of work over 6 months, I'm trying to think of the rule. If you're out of work for over 6 months, or is it over a year? Oh, you guys are going to stump me on this.
We'll go with 6 months to be safe.
Well, how long that you've been out of the workforce, we call it out of the workforce. So you're out of the workforce for a year, we want you back on the job for 6 months. But if you're only out of work for 3 months and you decide, okay, my company is not going to reopen, or there's massive layoffs and I was cut, I'm going to go find another job, you're fine.
Cool.
Relatively normal amount of time, I guess, just no more than a year.
Okay.
Okay.
Well, gosh, these have been great great questions and answers. Thank you.
Thanks, Vanessa.
Is there anybody else before we wrap up? Because I think we're kind of getting to a little bit longer.
I do want to say one thing about the FHA.
Yes.
So for homeowners that are in FHA loans, right?
Okay.
And they've been toying with the idea of, shoot, I was thinking about selling. I have a lot of equity in my house and I want to purchase. Or people that have suffered credit events that FHA is really their only option. That is where FHAs come in with all the forbearance and have said, and I'm going to glance over here because I don't want to get the terminology wrong.
Mm-hmm.
So if you've completed a forbearance, you went 3 to 6 months without making a payment, you need to make 12 consecutive mortgage payments. So 12 consecutive mortgage payments after that forbearance if you want to do a cash out refinance on your house.
Oh,
okay.
That's a big, right.
You're in an FHA loan and you've taken advantage of a forbearance and decide, I want to pull some cash out. Wait 12 months after you completed that forbearance. This mortgagee letter just came out September 11th. Before, there was not a lot of guidance from FHA. If you've completed a forbearance and you've made at least 3 consecutive payments on time, you can now qualify to sell and purchase again using FHA, or just simply rate and term refinance your property into a lower rate.
Okay, that's a lot of information, so we recommend everybody get a hold of you for that.
If you're in a current FHA loan and you have taken advantage of a forbearance and you're thinking that you want to do cash out, you're thinking that you want to lower your rate and term now that you're back at work and you're out of forbearance, there are time delays. There are time restrictions you are going to have to live with in order to cash out, lower your rate, or simply sell and purchase using FHA again.
Okay. Wow, that was a good one.
Yeah.
I got a whole, I sent it to Crystal. I'm like, here's the FHA rules. They're about this big.
Well,
and does that apply to VA too, or no? VA is separate. That's more conventional.
VA actually follows. They've always followed Fannie and Freddie. So
got it.
If you're out already, do whatever you want. If you're in, you got to get caught up. Your bank has to say you're out. You're good. You can do whatever you want.
Okay.
Before we wrap up, does anybody else have any questions for Vanessa? And if not,
can you, Vanessa, put your contact information?
I was gonna say, Vanessa, can you just do a little commercial plug with your contact, and can you talk about your website? You know, give them your phone number.
Crystal, can you put stuff up on my screen?
Yeah, just give them your name and number real quick and your email address.
Vanessa Henderson, area code 949-294-3841. My email, vanessa.henderson@academymortgage.com. It's obnoxiously long. Or just Google Vanessa Henderson Academy, and you're literally going to get my Academy Mortgage website. All my contact information. My office is over here in Corona, or of course, I have my office here in Keller Williams. There's a lot of information, a lot of different stuff happening. I mean, COVID has really initially messed with our world. Now, real estate, you guys have been booming. It's been crazy, the amount of offers and over asking price. We still continue to have little challenges in our world. And so if anybody has any questions, I'm always just so happy to answer whatever questions, concerns, oh, look at that.
How long does it take to do a refi now?
Honestly, with the amount of purchases that are coming in, we're locking refinances for 45 days.
Wow.
Some companies out there, banks, some of your big, like wholesale, they're 60 to 75 days on refinances.
Wow.
Because the purchase market is booming. So if you've got a good company that we're gonna prioritize those purchases just a little bit without extending the refinances too far. So we're still 30 days on purchases, and we are 45 days on refinances.
Okay.
Well, good. All right, guys. Well,
thank you.
We thank you so much for joining us, and
you're very welcome.
Thank you, panel and those who participated and attended. Thank you very much. We really appreciate you guys.
Thanks, Crystal. I see my little Zillow.
Your little Zillow on there. Okay, great. All right, you guys. Everybody have a good night.
All right.
All right, bye.
Bye. I'm trying to end.
This isn't working. You guys might have to shut me off. My mouse isn't working.